Good morning, everyone. My name is Mike. I'm your host. This is IPO Market Watch. Thank you very much for tuning in. I hope that your Thanksgiving day went well. In this video, I'm going to show you one stock that has been doing very awesome. I did a YouTube video on this stock 1 month ago. So I'm going to show you what happened so far, an update and so on the value of my shares and what they're worth now, since I had done the YouTube video where I said that I was going to buy the stock. That's one. Two, in this video, I'm going to answer later on in the video a question that's actually, I think it's a very good question. It's a very good question by one of the viewers, and I think it's a question that many people have, right? So it'll be a good chance to not just to answer it for everybody to see. I didn't want to answer it directly to the person that asked it because I think that a lot of people have the same exact question for sure. I know when I first started investing, I had the same thing, so it's going to be pretty cool. All right, the first part of this video, guys, is Gen Digital Incorporation. Now, if you are new, by the way, to this channel, welcome. Subscribe. Consider subscribing. Consider hitting the notification bell because this channel comes up with videos almost on a daily basis, and it's not about IPOs only, right? I also cover stocks trading on the market that have been in the market for years and so on, and there's a lot of buying opportunities that I come up with. Obviously, you never trade according to my videos. The buying opportunities are stocks that I believe are buys for me, right? But yeah, like this one, Gen Digital Incorporation, guys. Ticker symbol GEN. It was at 1748, as you can see here. So you're looking at a screenshot of the video that I did 1 month ago. And the title was why I'm buying this cybersecurity stock, incredible growth stock, right? I'm not obviously going to get into the details why I bought that stock. You can watch that video, it's still public. But the stock right now is at 21.19. So it was 17.48. Today it's at 21.19. What is my investment worth? So it was 100 shares at 17.39, and the stock is now 21.19, and I'm up 21.8% in 1 month. That's a really good investment, guys. That's a really good investment. That's a really good return for 1 month. And I have $380 in profit, right? Now, with that being said, will I sell Gen Digital Incorporation today and take that 380 bucks? No, I'm not. I think that this stock is worth 26 in my opinion, right? So I'll wait for it to go to 26 and then I'll make up my mind. So that's that with Gen Digital Incorporation. And let's move on to, I'm sorry. Here's some news about Gen Digital Incorporation that were within the past week. The one is Gen Digital Incorporation has, it went up on last Tuesday, because Morgan Stanley upgraded the cybersecurity company and gave it a $26 price target. We also have Gen Digital, which gets initiated with a buy target also from Bank of America on upsell opportunities, debt reduction, which was something I mentioned in my video last month, that they are reducing that debt and that their PE ratio is very good, their value very good, they have a lot of potential, they have new product offerings, and so on and so on. And so that's that with Gen Digital. Let's move on to the question that a user left, which I think is a very powerful question. So 23 hours ago, one of the viewers said, I have a question for you. If your ETF or dividend stocks are up, say 15-20%, do you cash in on some and then wait for a dip to buy more, or do you just sit on the dividend stock no matter what? All right, I'll get to the rest of the question. He has another question also. First of all, when it comes to dividend stocks, right? Because he's asking about dividend stocks and dividend ETFs. There's no one, in my opinion. I'm going to give you an answer from my experience as a trader. Everybody else may have a different opinion on this, but my experience trading all these years is this: in dividend stocks, dividend ETFs, there's no one universal recipe that we can apply across the board. There isn't, in my opinion. And I'll give you an example. Some are good to hold for years and years and years and add actually to them. You know, just add every month, buy a little bit every month. No matter if it's higher this month or lower the next month, who cares? I just buy and accumulate, right? And then there are others who, when they reach a certain point and I'm up at a certain point, I'm going to get out. What I mean by that, this is why there's no universal recipe. So we have a dividend ETF, FDVV, which is one of my top favorites, right? Ticker symbol FDVV. That's an ETF that pays dividends, and I'm very proud to own it. I'm very happy. That's the one that I will not sell if it's, 6 months from now higher than it was 6 months ago. I'm not going to sell it. Every month I will add to that because I have designated that for me something to just add for years and years and years and years and accumulate. And I feel that with that I can build some type of wealth, right? So that's that. That's a recipe that I use for FDVV. When it comes though to a dividend ETF like Tesla, I'm not going to apply the same recipe because Tesla is a options strategy ETF based on Tesla, and Tesla pays way better dividends than FDVV, and it pays them on a monthly basis, and they're way better. I get it, but because Tesla is a very volatile stock, and because doing option strategies on a volatile stock isn't something that's consistent in terms of the return, then what I do with Tesla is I'll try to buy it as low as possible. So I had bought a $12 entry in Tesla. Could have went lower, yeah, but and then let's look at that. I'm at $12 entry in Tesla. When Tesla goes to 14, 16 US dollars, personally speaking, for me, I'm out. So from 12 to 16, during that time until it hits 16 US dollars, let's say, I'm just going to continue accumulating monthly powerful dividends, and then when it's at 16, I'm getting out. And with the thinking that Tesla is a volatile stock, and it'll go back down, so will Tesla, and then I can just get into another. If it when it has a really good dip, I'll get back in. Those dips may take a year to see, right? I'll wait. That's okay. So that's that. As far as that's concerned, he also goes on to say, how do you manage those types of stocks? So basically, I think I answered that. There's no universal recipe. It depends on the ETF that you invested in, what type of ETF it is. When it comes to stocks, it's totally different from ETFs. Stocks are companies, and you're dealing directly with a specific company. So that you have to be more careful with, no matter who the company is. And I think with that one, we can apply more of a, are you up this much? Maybe take your profits. All right, so that's that, guys. Let me know if you have any other questions, because from time to time now I will feature people's questions and answer them on a YouTube video. I wish you guys all the best and take care.